Morning, Armor Insiders. Welcome to the morning meeting. Thank you for joining me. That was a picture of the equally weighted S&P. We're going to get to that in a minute. We're going to talk today. This is our virtual hedge fund morning meeting. You are the portfolio manager on the desk. So consider everything I say, whatever you're reading, then get rid of the noise, think about your strategy, and execute. Be the smart money at the end of the day. Okay. We're going to talk about the risk monitor and why that portfolio is outperforming everything else I'm doing. Okay. We're going to dive into a topic I wanted to talk about yesterday and I totally forgot. And that is the rapid and dramatic increase in zero dated option activity. Now, you've heard that talked about a lot. We have to address it so we understand the changing landscape and we adapt or we die. Okay. So we're going to talk about that and how it affects our portfolios. It dovetails with the risk monitor and why that strategy is blowing away every other strategy. Okay. I'm going to share with you top stocks to watch that we may add to the portfolio today, top stocks to buy, which we were buying yesterday. And then as always, we're going to round it out with the Armor carry trade. Yesterday was a unicorn trade that showed up, a gap and go unicorn. And I'm going to walk you through what it really means, the implications of that trade. First thing to look at right now is going to be the equally weighted S&P. Okay, that's right there. RSP equally weighted. I've been talking about it the last couple of weeks. The stock market, okay, and let's scrunch this down a bit. Okay, equally weighted is about to make an assault on an all-time new high. The leadership, QQQE, already at a new high. SPY, already at a new high. Equally weighted NASDAQ 100 is going to make an assault on an all-time new high. Equally weighted S&P, same thing. And the reason why I'm sharing this with you is to understand where we are in the cycle of this bull market. Leadership always leads at the beginning of the bull market. Leadership will keep going up. This doesn't mean that leadership goes down as the market goes up. It just means the rest of the market catches up and alpha shows up in areas where you haven't seen it yet. Innovative growth, some value groups that have been ignored start to catch capital. Think energy, think innovative growth stocks. Those stocks over the next, let's call it 3 months out, should add alpha to a portfolio. So why is the risk monitor portfolio outperforming everything else I do? Let's talk about that for a minute. First of all, what is the risk monitor portfolio? We've got 10 index that we follow. We have algorithms calibrated for those 10 index. We look for confluence across the 10, and that drives all of the decisions. Why is confluence so important? Because the confluence shows us the movement of institutions. And we like to say on this desk, information makes money, institutions make markets. You cannot get a mechanical bull market run like we're having right now without massive institutional flows of capital into the market. The importance of identifying those flows of capital is that when the elephants start to charge, there is no stopping them. And they don't run for a small distance. They charge for a while. It's too hard to stop them. So what happened last year on the 2nd of November is that the risk monitor went green in a very aggressive way. And I shared with you on the 6th of November, I don't know why, but this is the best buy trigger we're ever going to see. And the reason it's so good is that when institutions pound in all at the same time, what we saw was every index giving us the same risk on entry point within a 24-hour window. Institutions plan out months. They don't plan out days. You and I are talking about day trades. We're talking about a personal portfolio where we can get in and we can get out. Institutions can't do that. They have billions of dollars to run. They have to plan it out over 3, 6, 12 months. If you ask me to say what's the primary reason why they made the switch, I don't know. Let's call it peak interest rates, whatever you want to come up with. They decided in unison, rates aren't going higher, time to put capital to work. And then they map out a plan and they start putting capital to work. And it's not a 1 or 2 month thing. It's a multi-month thing. And that's what leads to these types of bull markets. So the risk monitor portfolio we run, this is a simple portfolio. Risk monitor goes green, buy all 10 index. Risk monitor goes yellow, cut the positions 50%. Risk monitor goes red, cut them out 100%, wait for the next signal. That portfolio's in on the 2nd of November, and it doesn't trade. It's just capturing all the upside. It owns NASDAQ 100 weighted, NASDAQ 100 equally weighted, S&P weighted, S&P equally weighted, Momentum Index, Value Index, the Dow Small Cap Index, IBD 50 or ARC, whichever one you choose, and the 30-year Treasury bond, TLT. That's it. No trading in, captures everything, does not get shaken out. Now, on the way up here, we've had a number pretty aggressive shakeouts in the market. You wouldn't believe it by looking at that index, right? The risk monitor on the way out, when we get a yellow or a red signal, overweights the importance of the NASDAQ 100 weighted and equally weighted, S&P weighted and equally weighted. Those 4 of the 10 are overweighted in the decision for the risk monitor to switch from green to yellow to red. So it helps avoid some of the violent action that you might see, for instance, in small caps, which have been all over the map in the last couple of weeks. Just crazy action. Or the violent action in ARC as an example, the innovative stocks, IBD 50, violent action for 3 days before the rip yesterday. There's nothing violent about that action right here. Equally weighted S&P is having a huge week, breaking out above 160, and I talked to you about that last week. So to wrap up this part of the conversation, and it dovetails into the next discussion I want to have, volatility outside of the weighted indexes, the biggest indexes, is increasing. And if that's where your lens is focused, this market could be very difficult because there's a day or two where it looks like the bottom's falling out of the market. So focus on the biggest, the best, the most diverse. Look at how they're performing. Use the risk monitor as a guide if you want to capture more of this upside. And I'm talking to myself as much as I'm talking to you. The risk monitor doesn't care about the fundamental noise we hear around us. It just executes. Sometimes we get in our own way. I have twice now put my positions down aggressively as the market looks like it's crumbling to avoid losses, to protect capital. I don't regret that. We all manage capital differently. We all have to understand what our risk tolerance is and our goal and execute that way. But I am sharing with you that we are in a massive mechanical bull market. And from a purely algorithmic point of view, there has been no stopping it. We haven't even gotten close to risk monitor yellow. So to put a bow on this week, all we need is a positive close today, and you get a weekly breakout of the equally weighted S&P that I suspect is going to take out the highs, making new all-time highs over the next couple of weeks. I think that's what we're going to see. I think they'll be broadening out. I'm going to go over stocks to buy and stocks to watch in a minute. Now let's get back to the fun part. Let's talk about top stocks to watch, top stocks to buy that we own in our portfolio. Okay, so here are some of the stocks we own in our portfolio. I'm going to run through this. We added them yesterday or the day before. We did some in the aftermarket and the pre-market. So we really had some nice run-ups here. But let's go through some of what we added yesterday. Okay, top stocks to own. We bought shares of Cloudflare again. There's the blowout. We had it before earnings, the blowout, booked some profits in here, sold off, closed the gap. We're long Cloudflare. This red line is where the stop is on these positions. Goes below the red line, we're out. The hardest thing for investors, I believe, that what causes the most inertia is fear. How can I put money to work? I don't know, blah, blah. Okay, figure out what your stop is first. Then it becomes real easy to execute. You know exactly what you're willing to lose. You've already lost it in your mind. Hits the stop amount. Then go put a position to work. That's also how you can figure out your position size, because you may say to yourself, gee, the stop is there. I can't lose that much. Okay, put the position on at a smaller size. Can you handle that dollar amount? Yeah, I can. Go put the money to work. There's no fear anymore. Okay, so Cloudflare, there's the stop. Added Pure Storage back to the portfolio. There's the stop. We think Pure Storage is going to come out with earnings, and we want to own that in front of the numbers. So, there's always risk on that, but we think there could be something interesting coming there in Pure Storage. Palantir, I talked about it. When it blew out, I said the pullback to this teal line, which is the 14-day moving average, is where we would get long. That's the stop. Trade Desk, back on Trade Desk. Got an upgrade today. Again, we owned it in front of earnings. It blew out. We booked a profit, sold off. There's the stop. See what we can do there. Those are some of the positions we added recently to the portfolio. So I'd call those stocks to buy. We added back our biotech position. LABU is 3 times XBI, the biotech index, and BIB is twice the big cap index. We like them both. We own them both. Okay. We added shares of Apple. I can't help it. I just think Apple right down here, right on top. I don't think the equally weighted S&P makes all-time new highs without Apple crossing 200. There, I said it. The stop is the 200-day moving average. If the equally weighted S&P is making all-time new highs, Apple is trading above 200. That's my call. Threw down the gauntlet. All right. Now let's look at stocks to watch. These are some stocks that we may add to the portfolio today. I want to get MongoDB back in the portfolio. I booked a profit on it. I'd like to own it again. I think I want to own Snow back in the portfolio. I booked a profit on it. I want to get long again. And I keep doing work on roadblocks. I'm not exactly sure I want to own this. As you can see, it went below the stop. I'd have to lower the stop to here, but it's possible I get long roadblocks. So those are 3 top stocks to consider. Now here I'm taking you to energy and the 2 energy stocks we bought recently. I'm not buying them now. We bought them tight to the 50-day moving average, and they blew out yesterday. Energy's off a little bit this morning, but energy is definitely part of our portfolio. But take a look at this. This is like a little bonus top stocks to watch or own. So NVDA is the, in this particular scenario, NVIDIA is the sun. And here are 2 satellite ideas that trade around the sun. One is RXRX and the other is SOUN, Sound Hound, and Recursion Pharmaceuticals. Okay. NVIDIA owns a piece of both of these companies, albeit small, but it puts them on the map. And in a market where the market's melting up and running into AI stocks, these 2 stocks could be interesting here. We already own RXRX and we're up 20% on the trade. Sound Hound is tight to the base in here, and I think we're in there around 330. Stocks trading at 360, somewhere in there. So hasn't broken out yet. Those are 2 thoughts for you. Wrapping up, I hope you all have a wonderful trading session. It's been a great week. I can't wait to work with you guys on the desk. So what do we have? We have Armor Report subscribers. You're going to get this video. You're going to get the captain's log. You'll get it delivered to your desk before the market opens, and you could do it on your own. You could be an Armor insider. You're here right now. You're going to meet me on the desk at 9:30. We're going to trade all day together. And then, of course, if you can't be on the desk all day and you can't run your own capital, we have the capability to do that for you. Feel free to give me a call, direct message me, whatever, and we could see if the relationship makes it. All right. Everybody have a wonderful trading session, a great end of the week, and I'll see you guys live on the desk at 9:30. Remember, at the end of the day, you got to follow your own path, and you've got to be the smart money. Take care, guys.